Greetings children, welcome to my channel XII Accountancy by Ch-1. Accounting made easy for you all. Before we start the chapter which we'll discuss today, I would like to request you all to kindly subscribe to my channel if you haven't done that yet. Also, don't forget to like the video if it is of any help to you, and also hit the bell button so that you get notified for every new video that I post. Moving on, in this video, we'll be talking about the chapter Financial Statements of a Company, which is the first chapter of Part B. So we have already talked about the financial statements in the previous videos. The table of contents, we'll be talking about the meaning of financial statements, just to brush up the financial statements of a company, and specifically the format of statement of profit and loss. As we have discussed in the previous videos, that the financial statements, they always tell us about the financial performance as well as financial position of a business concern. Now, this business enterprise can get to know about the various assets, liabilities, equity, revenue, expenses by the preparation of financial statements. We have discussed it in detail in the previous videos. For more details, please click on the I button. So now let's talk about the format of the statement of profit and loss. We have already discussed the format of balance sheet. You can check the previous videos. Today we'll be talking about the format of profit and loss. Whenever we use the word statement, the word account does not come here. You really need to ensure that whenever you are writing in your exams and you're writing the heading, whenever the word statement is used, then the account does not come here. And in case of a company which is registered under the Companies Act 2013, the statement of profit and loss is prepared as per the Part 2 of Schedule 3 of Companies Act 2013. Now, what is statement of profit and loss? It is a statement which shows us about the financial performance of a company. When we talk about the financial performance, we mean whether the company has earned profits or incurred any loss during the accounting period. So whatever period we are preparing the statement of P&L for, it tells us about the financial performance in terms of the profits as well as losses. So this is the format of the statement of P&L as per the Companies Act 2013. It involves all these items. First of all, we have revenue from operations and other income. The total of revenue from operations and other income gives us the total revenue. So 1 plus 2 gives us the total revenue. We'll discuss what it actually means and what all items are included in this. After we get the total revenue, then we find out the expenses. All the expenses such as these are mentioned here, and these are the headings which are given by the Companies Act, and you cannot change the sequence and you cannot change the headings. They will remain the same. As in case of balance sheet, the face of the statement of profit and loss profit and loss will always remain the same. The face of every statement of P&L for every company will remain the same, but the items which may further be included may be different, which will be shown in the notes to accounts. So after you have put all the expenses, then the total expenses will be calculated. Now, the total revenue less the total expenses gives us PBT, as we normally call it. PBT is profit before tax. On this PBT, the tax is calculated and subtracted, and then we get the profit and loss for the period. So this is the format of statement of P&L. We'll discuss each item one by one. So now first let's talk about the total revenue. As you could see from the format, revenue from operations plus other income. The total of revenue from operations and other income gives us total revenue. So for understanding the total revenue, we need to understand what is revenue from operation and what is other income. So on the revenue side, we have the revenue from operations as well as other income. Now first let's talk about revenue from operations. Now what is revenue from operations? You all have very often you hear the word net sales. Now commonly we call it net sales, but the other name that we use in the companies is revenue from operations. So revenue from operations means the revenue which is earned by the company from its operating activities. Now what are operating activities? Those activities which are carried on by the company in order to generate profit, in order to earn profit. So revenue from operations is commonly called as net sales. We commonly call as net sales, but in the format we will not. Earlier it was more often called as net sales, but now we use the word revenue from operations. RFO is a short form that we use. So basically it is the net sales, that is the sales minus sales return. Now it may be a manufacturing company, or it may be a trading company, or it may be any other company which is dealing in financial securities. But revenue from operations, anything that you earn from your operations is revenue from operations. Then comes the other income. Now besides earning revenue from operations, then the companies, they may also earn some income from some other sources. Now those sources are not actually the business, they are not actually related to the business activities. So whatever is related to the business activities comes under the revenue from operations, and whatever is not related to the business activities would come under the other income in the statement of P&L. So other income basically means the income which is earned by the company from its non-operating activity. So revenue from operations is from the operating activity, and other income is from the non-operating activities that are undertaken by a company. Okay. Now, in order to understand that what all comes under revenue from operations and other income, let's talk about them one by one. So revenue from operations, I have already told you, is the revenue earned from the operating activities. Now, uh, uh, in order to decide what will be revenue from operations, we should understand that what is a financial company and what is a non-financial company. Okay. So a non-financial company basically is a company which is a manufacturing company or a trading company. That is a company which is involved in manufacturing a finished product, some goods, or which is involved in trading. That is, purchasing stock in trade from somewhere and then selling it further. So a manufacturing or a trading company is a non-financial company. Now, what is a financial company? A financial company is a company which deals with, which deals in financial securities. For example, they are involved in purchase of debentures and selling those debentures further. They may be involved in purchase of shares and then selling them further. So all the financial securities such as debentures, shares, bonds, public deposits, etc. A company which is dealing in such financial instruments is known as a financial company. Now we are talking about revenue from operations. Revenue from operations means the revenue which is earned by a company from its operating activities, as I just told you. Now the operating activity may be different for different companies, type of companies. So for a non-financial company, the operating activity would be different. And for a financial company, the operating activity would be different, because a non-financial company is dealing in goods and a financial company is dealing in securities. So the operating activities will be different. So in case of a non-financial company, which is a manufacturing or trading company which deals in goods, for them, what will be the revenue from operations? Simple. The revenue which they earn from the sale of their goods sales. Then any kind of scrap, residual material, raw material which is left and is sold. So that amounts to sale of scrap. So sale of scrap is also revenue from operations. Why? Because scrap was a part of raw material. So if that is sold to somebody, that is also a part of revenue from operations. Then any revenue from any kind of services which are rendered. So if it is a manufacturing or a trading company, but they provide after sale services also. So the revenue which is earned from there is also a revenue from operations. Now in case of a financial company, since we are dealing with financial securities, the financial instruments such as shares, debentures, etc. So interest earned on such financial securities would be revenue from operations for a financial company. Then any dividend which is earned on the shares is a revenue from operation for a financial company. Any gain on sale of investment, they make investment and they sell investment. So any gain that they make on the sale of the investment, that is also a revenue from operation. So we need to understand that revenue from operation would be different for a non-financial company and for a financial company. For a non-financial company, the sale of scrap, revenue from services, all these are a part of revenue from operations. But in a financial company where the operating activity is different, they are dealing in securities, there we are dealing with interest, we are receiving interest, we are receiving dividends, and we may make gain on sale of investment. So all these things are included in the revenue from operations. Now let's talk about the other income. Similarly, in case of other income also, the as you know that other income is the income which is earned from the non-operating activities. Now these non-operating activities, they may be different for a non-financial company, and for a financial company it will be different obviously. So for a non-financial company, that is a manufacturing or a trading company which is dealing in goods, for them what will be the other income? Any interest that they earn on any kind of maybe debentures that they have purchased from some other company. They may also invest in debentures and shares and investments, but that investment is not for the operating activities. That investment is for a non-operating activity. Operating activities are those which are linked to the business activities, and non-operating are all other activities. So any interest earned on any investment made in debentures, any dividend which is earned, any gain on sale of investment, previous investments held are sold and gain is made on that. Now the same gain on investment was a RFO for a financial company, but for a non-financial company, gain on sale of investment will be a other income. But this same thing, if we talk about a financial company, for them it will be a revenue from operations. Same goes for interest earned also. Then next we have gain on sale of any fixed asset. So any fixed asset previously held, now sold, any gain made on that is again a other income for a non-financial company. Now for a financial company, all these things which have been mentioned above, they interest earned and gain on sale of investment, these were revenue from operations for a financial company. Now what will come under other income in case of financial company? Gain on sale of fixed assets. Now please note that gain on sale of fixed assets, for both it is another income, so there should not be any confusion, because fixed assets are held for the purpose of increasing the earning capacity. So any purana fixed asset that is sold, any gain made on that is a other income for both. Then any revenue from any project consultancy rendered would also be a part of other income. So understanding that what item is a revenue from operation and what item is comes under other income can be done on the point of view of understanding that which type of company it is, whether it is a non-financial company or a financial company. So moving on. Okay, so now in the format, as you can see, we have discussed about revenue from operations and other income, the total of which is total revenue. Now we will be talking about the various expenses. Now what are those expenses? Cost of materials consumed, purchase of stock in trade, changes in inventory, employee benefit expenses, finance cost, depreciation, amortization, and other expenses. We will be taking each one by one. So first is the cost of materials consumed. Now what is cost of materials consumed? Cost of materials consumed is nothing but it is the amount that you spend for the purchase of materials. Now what are materials here? When I use the word materials, what does this mean? Material basically means the raw materials that are purchased by a company for further processing. So any raw material or any other material which is used for the purpose of manufacturing or processing of the goods is referred to as materials here, right? Now cost of materials consumed, it means the cost of raw materials and other materials which are consumed in the manufacturing of the goods. So how can we calculate the cost of materials consumed? It can be calculated by applying this formula, that is opening inventory of materials. When I use the word materials here, I mean the raw materials. Okay, so opening inventory of material plus purchases of material, again purchase of what? Purchase of raw material minus closing inventory of materials, that is the raw material. So opening stock inventory can also be written as stock, so do not get confused. So opening inventory or opening stock of raw material, purchase of raw material, and closing stock or closing inventory of raw material gives us cost of materials consumed. So when we have these three things and we apply the formula, we can easily calculate the cost of materials, the raw materials which have been consumed during an accounting period. Moving on. The next item under expenses is the purchase of stock in trade. Now, what is stock in trade? Now, stock in trade is the stock that has been purchased not for the purpose of further processing or manufacturing, but this stock is purchased for further resale. So, purchase of stock in trade, it means the goods that are purchased for reselling. So, these goods are purchased for reselling. We are not going to make any processing on these goods. So if in case we do the processing work on the stock in trade that has been acquired, or if they are further manufactured into something else, they are changed into something else, then they will not be called as stock in trade. If further manufacturing is done, then they will be a part of cost of materials consumed. So what is stock in trade? Stock in trade, basically it means the goods that we have acquired for the purpose of reselling them to other people and not processing them in the accounting year. Let's take an example for the same. If in case a company has purchased paper for resale, okay, now the paper has been purchased for resale, now it will be shown as the purchase of stock in trade. But if the same paper is purchased and some manufacturing is done, some printing work is done, or we are manufacturing copies of it, then that would be a part of materials consumed. So further processing, if done, would be a part of cost of materials consumed, and if it is for reselling, it is purchase of stock in trade. Moving on, the next one is changes in inventory. Now changes in inventory may be relating to the finished goods, or the work in progress, or the stock in trade. So there may be changes in inventory, changes in the stock of what? Of the finished goods, that's one. Then work in progress and stock in trade. I hope you know the meanings. Finished goods are those goods which have been manufactured by the company and which are ready for resale. Work in progress means those goods which are in the process of manufacturing. Neither they are raw material nor they are finished goods, but they are in the process of being manufactured. And stock in trade. Stock in trade means the goods that have been uh, acquired for the purpose of resale. So changes in inventory includes raw material, work in progress and finished goods. And how can we calculate the changes in inventory? We can calculate it by subtracting the closing inventory from the opening inventory. So that is the formula that we'll use in all the three cases. So if in case we want to find out the changes in inventory of raw material, it will be opening inventory of raw material minus closing inventory of raw material. Changes in inventory of work in progress will be equal to opening inventory of work in progress minus closing inventory of work in progress. Changes in inventory of finished goods would be equal to opening inventory of finished goods minus closing inventory of finished goods. All this is done in the notes to accounts, and the net amount is shown in the statement of P&L. So this is nothing but the difference between the opening and the closing inventories respectively of raw material, work in progress as well as stock in trade. Moving on. The next item that we have is the employee benefit expenses. Employee benefit expenses means any kind of payment which is made to the employees or which is for the employees benefit. All those payments, they are a part of employee benefit expenses. For example, any kind of wages that you pay, or salaries, or bonus, or any kind of leave encashments, or staff welfare expenses, all these are shown in the notes to accounts. Employee compensation expenses, so all these are shown in the notes to accounts, and the net amount, the total amount, is transferred to the statement of P&L. So any payment which is made to the employees, or any payment which is for the benefit of the employees, such as gratuity, etc., all these are a part of employee benefit expenses. Obviously the medical expenses also. So moving on, the next one is the finance cost. Now what is finance cost? See, it basically means the cost which is incurred by the company on the borrowings. So obviously finance cost means the cost of borrowings. The firm, or the company may borrow loans or may take loans from the banks or from third parties. So the interest which is paid on that loan is a finance cost. So the cost of raising funds, the cost of raising finance is referred to as finance cost, and that is paid on the borrowings. So it basically includes the interest which is paid on borrowings, any kind of borrowing, such as the bank loans or term loans, or any bank overdraft that we have, on any cash credit limit that we have. So on all these loans, etc., the interest that we pay is a part of finance cost. Now, what all is included in the finance cost? Interest paid on borrowings from the banks and other companies. Expenses which are incurred on borrowings. Expenses which are incurred on borrowings means that for raising the finance, the expense that you have to incur, the paperwork, formalities, etc. The loan processing fee, any processing fee that you have to pay, that also comes here. Discount on issue of debentures. When we are issuing debentures at a discount, the discount is supposed to be a finance cost, because this cost is incurred at the time of issue of debentures for raising the funds. Last is premium payable on redemption of debentures. Redemption of debentures means the repayment of debentures. So when we repay the debentures at a premium, at a increased value, that premium is also a part of finance cost. So all these things are included in the finance cost. Next we have depreciation and amortization expenses. Now depreciation, as you know, it is an expense which is written off to statement of P&L. What is depreciation? It is the decrease in the value of fixed assets or the tangible assets, and it is written off over the estimated useful life. So that depreciation is basically shown in the statement of P&L. And what is amortization? Amortization is the decrease in the value of intangible assets. Depreciation is decrease in the value of tangible assets, whereas amortization is decrease in the value of intangible assets, which are both are written off over the the estimated useful life of the particular assets. So depreciation, cost of tangible fixed assets which are written off over their estimated useful life, and they are written off to statement of P&L. Similarly, the cost of intangible assets written off over their estimated useful life, and they are also written off to statement of P&L. So what are tangible and intangible assets? I hope you know that. Tangible assets, all those assets that have a physical existence, that can be seen and touched. For example, land, building, machinery, furniture, etc. And what are intangible assets? Which do not have a physical existence, cannot be seen, touched. For example, goodwill, patents, trademarks, mining rights, intellectual property rights, computer softwares, formulas, recipes, etc. All these are intangible assets. So all the depreciation, all the amortization, that is also shown in the statement of P&L under this head. Moving on, the last heading under expenses is other expenses. So the expenses which are not shown under any of the above six headings, so the one which is not shown here in all of these, if it does not find a place in any of these headings, then that will come under other expenses. So other expenses, again, it is shown in the notes to accounts, and all other expenses are mentioned, and their total, it is shown in the statement of P&L, right? So all the direct and indirect expenses are totally shown in the other expenses. What all can come here? Carriage inward, carriage outward, audit fee, bank charges, charges which are given to the bank. Bank charges, please note that it is not a financial cost, okay? So bank charges are normally paid by every business to the banks. They are the normal charges, so they are not a part of the finance cost. Finance cost relates to the borrowings. Bank charges relates to the normal account. So when bank charges is not a part of finance cost, it is a part of other expenses. So any entertainment expenses, conveyance, printing and stationery, business promotion expenses. So all these are examples of other expenses. So after we find out all these expenses, then we find out their total, and the total of all these expenses gives us total expenses. So we have found out that how we can calculate the total revenue, and we have also found out how we can calculate the total expenses. So now let's have a look at the format once again. So this was the format which I showed you. So the total of these two gives us total revenue. The total of all the expenses gives us total expenses, and total revenue minus total expenses gives us profit before tax. So revenue minus expenses gives us PBT, and the tax is calculated on this PBT, subtracted from it, and then we get the profit or loss for the period. So this is the format of statement of P&L, and you are expected to learn it by heart, and you are expected to remember the sequence in which the items have been placed here. So anything wrong that you do will result into losing marks, right? So profit before tax is calculated by subtracting the expenses from revenue. Tax expenses calculated on PBT and then subtracted, and net result is the profit and loss for the period. So we have talked about in this video the meaning of financial statements, the format of statement of profit and loss in detail with every item, and what all is included in the notes to accounts of every item. So I hope the concepts are clear to you. If in case you have any doubts, you are most welcome to leave a comment below, or you can email me on my email ID. Like, share, and subscribe my channel, and also show some love, put some comments there, nice ones, so that it motivates me to make further nice content for you all. So this is Inside Accountancy by Ch-1 signing off. Thank you so much.